GBPUSD. Finally, we introduced back the GBPUSD into our watch list after about 6 weeks break. Remember, we stopped trading the GBPUSD a couple of weeks into the new year, and this was as a result of identifying a trading opportunity on the USD JPY. So we dropped the GBPUSD, and fortunately for us, we capitalized on that bullish momentum on the USD JPY at the beginning of the year to scoop in over 800 pips on that one. And in the last couple of weeks, you would agree with me that the USD JPY market has been a little bit choppy due to the uncertainty surrounding that market. And due to this uncertainty, it made a lot of sense for us to step aside and wait for some significant signals before we can actually take a trade on that asset. I remember a couple of weeks ago, 3 weeks ago, we received an hawkish comment from the Bank of Japan, where he emphasized that the interest rate, the inflation pressure in the Japanese economy is gradually thinning out, which could welcome an opportunity to pivot from their current ultra loose monetary policy as early as the month of March/April. Now, during the a couple of weeks ago, we also saw the GDP report from the Japanese economy, which wasn't that impressive at all, bringing in the second contraction in that economy in the last 2 quarters, technically putting the Japanese economy in recession. Now, this has further added a clog into the wheel of pivoting from the current ultra loose monetary policy. And finally, last week, we received comment from policy maker from the Bank of Japan, emphasizing that the Bank of Japan is actually ready to intervene in the forex market if the price of Japanese yen continues to drop. Now, this has triggered an uncertainty in that market, making me to step aside from that asset for a while. Let's see some significant confirmation before we can take a trade on that one. So as a result of that, I had to include the GBPUSD for this week, and here we go. Now, at this point, the US dollar continues to hold its ground against the pound sterling, driven by optimistic comment from the Federal Reserve official throughout the last couple of weeks, and this has caused the GBPUSD pair to weaken. Additionally, lower consumer confidence data from the United Kingdom for the month of February may have also added to the downward pressure on the pound sterling. However, recent UK PMI data indicates signs of improvement, suggesting that the economic downturn experienced last year might be ending as a result of this. Now, with global risk sentiment improving, the Bank of England is likely to maintain cautious approach regarding its interest rate decisions. And on the other side of the pontoon as well, we are all aware that the Federal Reserve officials have proposed delaying any potential rate cut for a few more months to assess whether January's high inflation report was just a one-off event. Now, as we monitor this development, we will be looking out for structures to help us understand how market participants are going to react to the recent developments from both economies. Now, to start with today, we will look at the daily time frame, where we definitely want to be having an holistic perspective into what this market is saying. Now, what I did on the daily time frame was to take into consideration the nature of price action since the month of July of last year, and in fact we have quite an interesting trading setup to work with ahead of this week. Now, the first thing I was able to observe here since the month of July is the fact that price action had continued to find lower highs. Now, when we connect the series of lower highs here, we have this beautiful descending trend line to work with, which of course also reveals how strong the US dollar is in the last 6 to 7 months. Now, in addition to this descending trend line is another ascending trend line which captures the series of higher lows since the month of October, that is the last 4 months, to emphasize that despite the strong bearish momentum, we still have signs that buyers are trying as much as possible to build a momentum. Now, going into the new week, the question now is, the bullish momentum we noticed in the last 3 to 4 months, will it be capable enough to break out of this descending trend line for the first time to incite an uptrend scenario, or will this ascending trend line be broken to the downside to incite a sell-off? Now, to position ourselves for the next move, we need a key level that we are going to be using to strategically position ourselves. And when you look at the structure closely, after taking into consideration the character of trading activity since the month of May of last year, we have the 1.26500 area to guide our trading decisions. And of course, you will see how this level had played a major role in determining the direction of price action in the last 8 months. Look at what happened here in the month of May. You saw how this level had been a strong selling niche before it was broken to the upside in the month of June, and throughout the months of June/August, price action has been trading above the structure, emphasizing the strength of the buyers around that area. And not until the month of September, we finally saw price break down that structure, and price traded below that area until the month of December. And since the beginning of this year, you can see market has been going through a choppy market situation, further emphasizing the level of indecision, especially around that key level, to emphasize how crucial this level is for us. Now, to guide our trading decisions going forward, we would like to see how market participants will be reacting to this key level on our lower time frame to make an informed trading decisions. Now, to make things easy for us, I was able to identify a simple setup on the 4 hours time frame after considering the nature of price action since the month of February began. And of course, it's quite clear that we have an ascending channel to work with. So connecting the series of higher lows here, we have the support line of the ascending channel. And when we connect the series of higher highs, we have the resistance line of the ascending channel, while price action remain floating above our key level at the 1.265. Now, the question as we head into the new week is, will price retrace back into the 1.265, which interestingly shares a confluence with the ascending trend line, that is the support line of the ascending channel, to incite an uptrend move? Or are we going to see price break out of the 1.269, which interestingly will also have broken out of that descending trend line we identified on the higher time frame to incite an uptrend continuation? And thirdly, will price action break down the 1.265 to incite a sell-off in this market? Now, let's see how the market has been playing out since the new week began. So when we scale down into the 1 hour time frame, we have a beautiful setup to guide our trading decisions for this week. Now, if you look at the structure closely, you will see that the week started on a bearish note. Price started at around the 1.26830 and has since been confined within that range, and we had the support line of the range at the 1.26565. Now, with a range identified on our chart, obviously we want to exercise patience, waiting for price action to either break out of the resistance line to give us an opportunity to buy, or break down the support line of that range to give us an opportunity to sell. Now, to start with, let's first of all take into consideration the potentials the sellers have at this point in time. Now, the only condition that will make us to sell this asset is for price to break down the support line of that range at the 1.26565. But one thing here is that we are not going to be having a sell stop order. Instead, we are going to exercise patience and wait for confirmations before we jump into that sell position. And the reason why that is simply because of the fact that price will still remain above our key level at the 1.265, and of course above the ascending trend line we identified earlier. Now, for us to feel comfortable selling this asset, we would like to see price break down this area, the 1.265, before selling. However, we can actually join a bearish momentum even before the breakdown of the 1.265 happen, and that will only happen if we have price breakdown the 1.26565, retest it, then we see continued selling pressure, revealing that buyers are finding it difficult to stay above the support line. And if this happens, then we can sell even before the breakdown of the 1.265 level happens. So this is how we are going to be managing a sell position. We are not looking out for selling opportunities unless the breakdown retest of the support line of that range at the 1.26565 happens, and a further additional position when price breaks down the 1.265. Now, with that in mind, let's talk about the potential the buyers have. Now, with our resistance line sitting around the 1.26830 area, and the fact that price action is trading above both the ascending trend line, which happens to be the support line of the ascending channel we identified on the 4 hours time frame, and of course price still remains above our key level, it makes quite a lot of sense for us to have a buy stop order above the resistance line here and look out for more opportunities to buy if price action goes ahead to break out the 1.26900 area. And in fact, we could add more buy positions if price breaks out of this psychological level at the 1.2700 area. So I encourage us all to mark out these levels on our chart, as we will be needing it to guide additional buy position if ever price action breaks out of that level. So this is my simple view on this asset for today. So our center of focus is basically going to be between the 1.26830 area and the 1.26565, where depending on the direction of the breakout will be guiding our trading decisions, at least for the first half of this week. So I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. And if you have any questions whatsoever, feel free to let me know in the comment section.